China has been setting the tone for market sentiment on this trading week. The government has finally realized the dangers of a shaky economy, so Beijing has introduced a series of monetary and fiscal stimulus to prop up the lion economy. Hence, all assets related to China recorded growth. Gold prices, for instance, have hit another record, while the price of silver has surged to a 12-year high. However, starting next Tuesday, China's domestic markets will be closed for the Golden Week holiday, so traders' main focus will shift to economic reports from the United States. Markets are braced for another turbulent week as U.S. labor market reports are set to be released, and this is the key area of focus for Fed Reserve policymakers right now. The Fed's 50 basis point rate cut was aimed specifically at addressing the increased downside risks to employment, according to Fed Reserve Representative Lisa Cook, who made this statement on Thursday. Her colleague, ADRIANA KUGLER, is on the same page. Moreover, she believes that the central bank should now shift its focus from inflation to its employment mandate. If conditions continue to develop as they have so far, further rate cuts will be appropriate, KUGLER commented on the Fed's further policy moves. For Wall Street, such prospects provide benign conditions for growth. If we take into account the optimistic forecast for profits from artificial intelligence, chip manufacturer, and micron technology, then the closing of the S&P 500 at a historical high looks quite natural. The index opened on a Friday, consolidating within the intraday corridor of 5,721 to 5,767. Amid the clear-cut dovish sentiment from Fed Reserve policymakers, the US dollar is set to close its fourth consecutive week in the red and possibly its third month in a row. On a Wednesday, its index against six major currencies hit a 14-month low at 100.21. However, the dollar index opened in the green on a Friday, trading within the intraday corridor of 100.40 to 100.90. What sparked the buyers' interest? After all, US macroeconomic data has broadly aligned with the forecasts. At a first glance, it might seem like a simple rebound in the dollar's exchange rate and an attempt to correct the imbalances that have developed. However, the fragile balance was disrupted yesterday by a weekly update on initial unemployment claims. The number fell to a 4-month low and thereby indicated the stability of the US labor market. Perhaps the markets view these figures as a precursor to higher non-farm payrolls for September, which will be released next Friday. This Friday, a wave of volatility on forex may be triggered by a report on a rise in inflation in the United States. According to forecasts, the annual CPI will have to decline to 2.3% and thereby support the dovish agenda for monetary policy of the US Central Bank, which has to balance between the employment mandate and the risks of a rise in inflation. But for the US dollar, such an indicator will be a reason for another decline. As for its position against the euro, the weak inflation data published today in France and Spain played into the hands of the greenback. The annual CPIs came out at 1.2% and 1.5% respectively. Thus, the data reinforced the arguments in favor of a further rate cut by the ECB at the meeting on October 17, and this factor had a bearish effect on the euro, pushing its price into the support area of around 1.1100. At the same time, the US dollar's position also appears unstable. Logically, the market should consolidate around the previously reached levels, though we cannot rule out the possibility of a high volatility accompanying this process. Our analysts believe that the euro will ultimately stabilize near the levels where it closed yesterday's trading. Despite local speculations, the euro-dollar pair continues to trade within the peak of the upward cycle, with the key resistance level at 1.1200. For the uptrend to continue, the buyers need to settle the price above this level today. If they succeed, the euro will get the chance of surpassing a one-year high at around 1.1276. Otherwise, the euro-dollar pair is likely to fluctuate around its current levels. Meanwhile, oil prices are trading lower. The benchmark Brent crude once again skidded to $70 per barrel. And our analysts believe that if the price settles below this level, the odds are that it will move down towards the local low of the downtrend. However, before this scenario develops, the $70 level may be seen by traders as a temporary support for revising their positions. Let's not forget that prices dipped below this mark in early September when the market reacted to OPEC's decision to delay the increase in production rates. And as a result, that news became the starting point for a gradual recovery in the prices. And now there is a possibility that the cartel might cancel that decision. Yet there are no justified reasons for the decline in oil prices. In fact, quite the opposite. US crude oil inventories are gradually shrinking, and this decline should have driven up oil prices. The same goes for the announced revival of the Chinese market by Beijing, which should have supported prices, but that hasn't happened yet. So, oil is likely to trade under speculative pressure at this moment. The Russian ruble is behaving as expected. Yesterday, the dollar-ruble pair moved toward the upper border of a relatively narrow range, staying below 93. And after the price had reached this level, it reversed downward. Now the ruble is heading toward the lower border of the intraday corridor between 92.3 and 92.9 rubles per dollar. The instrument is likely to reach this level later today, and then it may reverse direction again. And all in all, there are currently no reasons to expect any significant changes in this situation. The Russian ruble maintains stability. By the end of the trading week, the ruble's rate against the yuan also stabilized, trading near 13 level, and there is a key level around which the price is fluctuating. And to break the current stagnation, the buyers need to settle the price outside the range of 12.9 to 13.3. Once the price goes beyond these borders, it will allow the yuan-ruble pair to exit the consolidation zone and begin a new movement up or down. So that's all for today. We monitor developments in the financial markets. Subscribe to our channel and follow news with us. We wish you profitable trading and have a nice weekend. See you on Monday.